Financing your dream home might seem difficult, but don't worry. If you have any query related to home finance, whether it's about interest rates, repayment strategies, or tax deductions on your home loan, you've tuned into the right show. Very, very warm welcome to Magicbricks Now. This is Property Hotline, the show that answers all your real estate queries. I am Kavita Krishnan, and our special guest for the evening is Kartik Jhaveri. Now, Kartik is the founder and director of Transcend Consulting India Private Limited. Kartik, welcome to the show.
Thank you, Kavita.
Let's start with this question that's coming on our website, www.mpnow.in. Now, Fernandez writes in to say that he wants to shift his loan from HDFC Bank to SBI. Now, he wants to know how much should he pay the bank for the transfer. He adds that only the first dispersal has been made by the bank on a pre-EMI basis. So it's very early days yet, and he wants to move his home loan. Obviously, because a lot of banks have gone around cutting rates recently.
That's right.
Should he actually do that, or should he just negotiate with the bank?
So the first thing that he has to look at is the differential interest rate. So obviously the basic rule is that if you are getting a lower interest rate and as much as maybe at least about 0.75 to 1%, then it makes sense to even consider this transfer. Now, from my understanding, most institutions would require you to hold on for about 6 months before you can actually effect this kind of a transfer. So maybe if you've just got your disbursement about a month ago, perhaps you need to pay and stay with the existing institution for another 5 months, and thereafter you can initiate your transfer proceedings. But even before you do that, you might want to consider speaking to your existing financier and ask them that I'm getting a cheaper loan. Would you like reset my loan? And if they agree to do that, even at a price of maybe 0.5% or 1% as a one-time fee, I think it's still well worth going with this proposition and staying with the existing loan, because there's a lot of processing fee, there's a lot of other situation and time consumption, and not to mention a little bit of stress also while you're actually moving. So if you can get the same deal from your existing financier, maybe you want to stay with them. So therefore think about all these factors and then make your move. And like we always have said, it's absolutely fine to move if you're getting a definite 1% benefit and your existing lender does not wish to reduce the rate of interest for you. So those are the options before you.
Kartik, while you were talking, I was just looking at the rates that we're showing on the screen right now.
Right.
HDFC Bank rates are around 9.4%. Meanwhile, SBI is lending at around 9.35%. Of course, it's lower if you're a female borrower, but that's not the case over here. Now, tell me this, does it still make sense for him to move?
No, I mean, at this kind of a rate of interest differential, not at all. That's why we normally say that if the difference is anything greater than 0.5%, it's still a case. And that too, if you're in the early years of your loan. So if you're in the last maybe 3 or 4 years of your loan and if there's a differential of maybe 0.5%.
How early is early? Because clearly Fernandez over here is in the early years of his loan. It's just
absolutely. So if you're in the first 3 years, then it's like absolutely early, because the interest component is huge, it's massive. And the principal repayment is really minuscule that's happening in the first couple of years.
So, Fernandez, here's the thing. What you really need to do here is, like Kartik said, first go to your bank, speak to them. Probably they'll give you a better deal, because banks across the board have, cut interest rates, though they've not really passed on the entire benefit of RBI's rate cut yet, which means that hopefully there would be more rate cuts in the offing, which is what the governor also hinted at. But having said that, do go and speak to your bank first and then look to actually move your loan, because you will have to pay a processing fee at the bank, to the bank that you're moving to. So you need to factor in all of that and then take a call as to whether it actually makes sense, because the differential, as far as we can see, is hardly 0.5%, which is not a great difference over here at this point in time, right? Moving on to an email query now. Yogesh Borse says that he took a loan of 25 lakh rupees when he had a salary of 40,000 rupees a month. Now, he also made some part payments, has paid 16 EMIs so far. His salary is increased to 65,000 a month now, and he wants to buy another house. Now, he wants to know if he'll get a home loan for the same, and if yes, how much. At the outset, Yogesh seems like somebody who's very proactive about his home loan, which is something that we really encourage on the channel over here, Kartik. But the fact that he's looking to take a second home loan before he finishes off the first home loan, does it really make sense? How much of your salary should actually go towards paying EMIs?
Absolutely. I mean, he's already paying more than 60%, and I was going to say, Yogesh, and for everybody else, so you want to buy another house, fantastic. What happens if you lose your job? You lose both the houses, because you will go under a defaulter, your assets will become an NPA, And the bank is not going to give you any sort of moratorium or anything of that order. So which means, come 6 months, 9 months, and both your properties will be on the block and you can't even stop it. The SARFAESI Act is so powerful. So please do not go, overboard. You are already overboard. Now, a good rule of thumb is to not pay more than 50% across all your EMIs from whatever your salary is. Because then, you want to obviously spend about 30 or 40% of that, or at least about 25% for your expenses. And if you don't save 20, 30% of your income, you will never make long-term assets. So you make those long-term assets which will help you on retirement, other education goals and other financial goals that you might have for you and your family. So therefore, you are already way above the board. Even when your salary goes up to 65,000, even in that kind of a situation, you will be somewhere in the range of about little short of 50%, which leaves a little bit of a gap, but then invest that money. I don't think this is the time to buy the property, but still, to answer your question, with this little increment that you're going to have, you can approximately expect that, if your income is going up from 40 to 65,000, that means you can have an additional loan somewhere in the range of about 10 to 15 odd lakhs, because half of your 25,000, which is about 12,000, is which will be taken as your EMI. So depending on the tenure and the rate of interest prevailing, 10 to 20 lakhs is 10 to 12 lakhs, 15 lakhs maybe at max. So that's your loan.
Yogesh, taking off from Kartik's advice just now, here's what I would recommend to you. You could actually go ahead, invest that surplus that you're going to get once your salary increases. Invest that surplus and save up again, make a nest egg which you can then use to fund your second home. So the home loan that you would probably end up taking for your second home, that could be that much lesser. So you could actually use it as to create the down payment and a little more than down payment for your second home. You'll probably have to delay the dream of that second home for a year or two, but it should work out better in the bargain. However, that's a call that you need to take at the end of the day. So go ahead, figure out what works best for you and take the decision. Website query again now. Nilesh wants to know what happens to the home loan insurance if one fully prepays the home loan before the tenure. That's a very good question. What happens?
Well, the loan your home loan is over, but your insurance will stay as it is. See, typically most of these insurances that are given are the decreasing term variety, where your insurance is actually tied up to the outstanding principal of your loan. So as your loan outstanding principal is reducing year after year, automatically the term, which is pretty much in sync with your tenure of loan, the term insurance itself has a reducing cover of sorts. So every year the level of cover is falling. So therefore, if you passed away, if you went away for some reason, unfortunately, then your loan is paid off by the insurance company and the burden is not passed on to your assets and onto your family in due course. So which is where these kind of loans help. One more other little piece of information which I'd like to share with all of you is, you can definitely, most lenders sort of insist you to buy this, but what you might want to do is you might want to consider a pure term insurance. So even if you've taken a 1 crore loan, you take a 1 crore insurance, you build up that extra insurance. Going forward, this insurance will not fall, but you might have other needs or other specific, you might otherwise go in for a vehicle loan, you might actually take something else couple of years down the line. So why not have a steady level of insurance cover, and don't link your insurance to your home loans. So if you have a separate term plan which you on your own manage, what will happen in due course is, depending on your assets and depending on how your wealth is growing, you might want to then taper off your insurance, but not really link it to your loan. But at all points of time, of course, the loan has to be covered. Now that's absolutely a 100% rule to be with. So
at the end of the day, so that's a key takeaway that you need to remember. If you're in the market for a home loan, you need not buy the insurance from the lender. No lender can actually force you to buy that insurance. Also, you need not specifically buy the product that the lender is selling to you. If you want to buy any other insurance that covers your home loan, you can go ahead and do that. And you can also consider the option of going in for term insurance rather than take the home loan insurance that is being sold to you. Now, we have a caller who's dialed in all the way from Qatar. Wilson has called in. How can we help you, Wilson?
Hello, good evening, ma'am. This is Wilson from Qatar, and good evening to sir as well.
Hi.
Good evening.
I'm a regular viewer of your show. Thank you very much, and compliments to you for bringing such a fantastic show with a lot of information. Normally, we don't get information anywhere else. That's the only reason why I'm calling as well. I do have two queries.
Okay. Tell us what's your question.
The first one being, because I do have, say, two properties at the moment.
Okay.
And the first one is not on loan, that was self-financed. And the second one is on loan, and now I'm planning to buy a third one on loan as well.
And all these are in India, Wilson?
No, I'm in Qatar only.
The properties?
Yeah, property. So I would like to know, since for the first loan, first apartment, I don't have loan. So how much of tax exemption can I get for my first loan? That is for the second apartment. And for the third loan, which is for the second loan, which is for the third apartment. So I would like to know how much of principal and how much of, interest tax exemption can I get for my first as well as second loan, which is for the second as well as for the third apartment. And I do have one more query.
Okay.
So I would like to know, am I eligible to keep one property for self-occupancy since I am not staying in India?
Okay, he doesn't live in India. Can
That's
he
right.
consider one property for self-occupancy? Also, he's plans to take another loan. What is the tax exemptions he can get over there?
Okay, so Wilson, we will address all your queries one by one. Number one, nobody can force you to give any property on rental. So which means you can keep not one but all three of your properties as your own properties where you can choose to come and live in whichever property you want. So technically speaking, you can have three self-occupied properties also, or properties, let's say, which are meant for your personal consumption, right? You can do that per se. Now, from a tax point of view, what happens is this, that if you have more than one property, then the income tax department says that you choose which of your property, and typically it's the property that we are normally going to live in. So that property becomes our self-occupied property, SOP for a short form. The other properties, now whether they are actually rented or not rented, all the remaining properties other than your primary self-occupied property will be known as deemed let out or actually let out. If they are really let out, then they are known as let out properties. If they are not let out, then they are known as deemed let out properties. Now, in all these scenarios, what happens is you get 1,50,000 rupees of exemption in your section 80C. That's on your principal repayment. So through your loans together, 1,50,000 is the outer limit. So that's what you need to understand for your principal repayment. Now, what happens is you're already going to have a self-occupied property, which is what you are specifying. So the other two properties will become deemed let out properties. And on these deemed let out or let out, whichever is the scenario, whatever interest you will earn, whichever interest you will pay on these two properties as a part of your home loans, that entire interest is exempted or deductible from your total income calculation. So which is to say that it's a huge advantage that you can have. So that second and third property, but then there is a little bit of a simple calculation which you need to understand. If these properties are actually not let out, then you will have to report in your income something which is called as a fair rent, and which is known as the rental value or the fair rent or the standard rent as it's popularly known. So that is the rental which you report as income, and against that you claim a deduction, and the deduction is the entire amount of interest paid. So effectively in your books of accounts it will become like a loss from house property, because obviously the interest will be much more than the rental that you're going to be showing or declaring. So that's how your treatment really works out. For your self-occupied property, 1,50,000 and interest up to 2 lakhs for the benefit of all other viewers. For properties that are your second and subsequent properties, again 1,50,000 in terms of principal exemption, and for your interest, any amount of interest is deductible from your income.
Right, Wilson, I hope we've answered all your questions over there. Moving on to now Manoj Kumar, who's dialed in from Faridabad. Manoj, what's your question? How can we help you?
Good evening, ma'am. Actually, I have a property in Faridabad, and initially I had taken home loan from SDFC. After the sale deed executed, builder submitted the sale deed to the bank, and after it was executed in 2013, in 2014 I transferred my home loan from SDFC to State Bank. So they said, okay, after 1 month I'll give you the papers. While we went to collect the paper, we found that my sale deed is not there. So they said, okay, you come after 2 months, we will search. Finally, they could not found. We submitted all other papers to the State Bank, and State Bank advised me, not on paper, on verbal, they advised to file an FIR through SDFC and public notice and certified true copy. SDFC did all these things after 1 year. Everything was done in 2015, mid of 2015. Then we collected all the papers from SDFC, then submitted all the papers to the State Bank. So transfer was done in February 2014 and 2016 now. State Bank is saying you submit the original sale deed or pay the entire amount. Now SDFC is not ready to get transfer to the SDFC Bank. State Bank is saying give me the money, and without the original sale deed, no buyer is accepting this property. What I should do?
That's a very, very difficult position to be in. What can he do really? The sale deed is lost for no fault of his.
Yeah, absolutely. I mean, this is a very tricky kind of a situation, Manoj. But listen, you know what really happens is every time we buy a property, we are obviously registering our property. Now, there were earlier days where people would not register properties simply to avoid stamp duty because they used to have possession of it. But the whole advantage of registration is that if you actually lose your document, or let's say the house is on fire and the document gets burnt or damaged or lost for whatever reason, the registrar is the person who can issue you a duplicate copy or what is known as a certified copy. They scan this thing and they put it. In fact, they can give you an index to these days. At least this happens in Maharashtra, you can actually put in your property number and just download your registered scan copy of the agreement. So just check if this is already possible at the sub-registrar's place. So that is one thing. And the other things that you've done in public notice and all of that, now, obviously all that is the routine procedure that you have followed. State Bank of India will unfortunately keep following its protocol in terms of the audit guidance process note that they might be having, and which is why they are demanding the same thing again and again. So my suggestion is, instead of doing a verbal conversation, do a written communication and write it to them and say that, look, you've already got a certified copy. So why should you actually keep demanding for the original sale deed? A certified copy from the sub-registrar's office is as good as your original, and it is a completely tradable market tender. You can actually move your property. If there is any sort of mortgage or any sort of lien on your property, the registrar's records would show it. So which is why it is as good as the original, and you can absolutely use it. Should not be a problem. Please insist a written communication with SBI. I mean, that would definitely sort of help you. And otherwise, I was going to tell you to do the police complaint and the notice, but you've already done that. So you've already gone through that procedure.
Manoj, there's another thing that you can do. Kartik just said, write to SBI, and if even after that you are not, you don't get a satisfactory response from them, they still turn around and ask you for these papers, then you can raise it to the ombudsman. Every bank has their own ombudsman, and if the SBI ombudsman is not able to satisfy your problem, to address your problem properly, the Reserve Bank also has an ombudsman. And I think, Kartik, you have something to add over there.
A lot of times when we say write to the bank, it's not as if you don't already know that, but a lot of times we undermine the power of the written word. Lots of times we talk to people over the phone. You might have already visited the bank 25 times maybe, and nothing really happens. But when you write a communication to somebody, that person is also obliged in some sense to write back to you. And when they have to write back to you, they are going to think 25,000 times of what they are putting on paper. Because whatever you write all becomes a part of a contract or a relationship or an exchange of communication between any two parties, and which have a lot of value and a lot of standing in the court of law. So which is why do not ever undermine, for you and for everybody, is the power of written communication. Please do write a letter, sign it, send it to them, take their acknowledgement, and you're pretty much clearing your stand. See what they have to say. They might say anything they want to on verbally or orally when you are interacting with people, but when they have to write and give, they're going to think a lot of times before they actually put something down on paper.
Which is what we keep saying on Magicbricks Now. At the end of the day, this is your home. This is your life savings. You've worked really, really hard for that home. You put in all your money over there. So whether it is a builder, whether it is a banker, whether it is a broker, whoever you're speaking with, ensure that you get things written down. Ensure that you do it in writing so that you have a record. And also, whatever you are writing to those people goes on your record, goes on the record that you are of, the relationship that you have with them as customers. That will stand you in good stead, just in case things do get go from bad to worse, right? Next question from Rajesh. He's tweeted in, wants to know which banks provide an overdraft home loan. Kartik, before you take the question, I would want you to take a minute and explain what exactly is an overdraft home loan, because this is a very interesting product. And I'm sure, a lot of viewers would be interested to know what exactly this is and how it will help them.
Yes, absolutely. I mean, don't get startled by what overdraft home loan means. It's actually the technical name. And the brand names for a lot of these products are, for example, SBI calls it BankSgate, somebody else calls it Home Saver, somebody else calls it Smart Home Loan, or, there are lots of names by which these products are known. Now, essentially, it's a very interesting product. It's quite a lovely little innovation that has happened many years ago. It's been in the market for quite a while. What this loan does is, of course, you get your home loan like your usual loan. Now, along with this loan, you have a overdraft account, or what is known as a current account, which is sort of linked to this account. The amount of money that you place in your current account, it could be any money. It could be, for example, you start using from your ordinary savings account, you start shifting onto this current account. So when you shift to this current account, when you're doing your regular routine things, you get your salary into this current account, you spend, you withdraw money from the ATM, all of that is permitted. It's absolutely identical. Just that whatever is the balance in this current account at the end of the day is deducted and considered as a partial prepayment of your loan. So to give you an example, if your loan is 1 crore and for the end of the day in your bank account, if you have, let's say, 1 lakh rupees, so the interest calculation for that day would be 1 crore minus your bank balance of 1 lakh rupees, and therefore you will be charged interest on 99 lakhs. Fabulous way to save lakhs of rupees on interest. So it's a fantastic product. It's great. Some people think it's a little bit of a flip-sided thing because the cost of this loan product is a little higher, but little higher in the sense it's probably about 20 basis points, which is 0.2% approximately. It could be 0.15, could be 0.25. The market's dynamic, the rate keeps changing all the time. So that's the difference between the rate of interest between your traditional products and these kind of OD kind of products, or overdraft home loan accounts. So it's a fantastic thing. Let's say you've made some profit in the stock market. While you're thinking of what to do with that money, you can park your money here. Or for that matter, you can do your routine, lifestyle expenses, and whatever you do as your regular account, you can shift your regular account here. If your employer allows you, you can make your salary account here, or you could just basically have an account and do an automatic transfer through your phone. Whenever you have surplus funds, go park it there. If you've sold a property and you got some money from some other property and you're thinking of what to do even for like 10 days, you can save a lot of money. So there are lots of ways and means by which you can actually use this account. If you get a bonus, for example, you can park the bonus here for a few days. And for the number of days that you park, you're saving a lot of money on interest. So there's a humongous amount of savings that you're doing. And if your loan is at 9.25% or 9.3, just as an example, then you are actually earning, what money saved is money earned, right? So you are actually earning that 925 or 935. And if you make that on a pre-tax basis, you're actually, technically speaking, earning more than 12%. So it's a very, very interesting sort of a proposition to have. If you all want to shift, maybe you can even think about, doing that shift, and then obviously keep monitoring your loan, see how it happens. If you are in a situation where you just are never left with any surplus, then this is not for you. So then don't even, endeavor to go to this place.
Kartik, I was just going to ask you this. You do have a lot of salaried employees who get bonuses.
That's right.
Typically people in sales get a lot of bonuses. People in marketing get a lot of this.
Correct.
So would you recommend it to only salaried employees like those, or should salaried employees just stay away from this product? Is this only for self-employed people, businessmen for that matter?
No, I mean, it's a myth that businessmen actually have, surplus funds. A lot of businessmen actually do business on an overdraft themselves. so, for them also it becomes irrelevant. No, but this product is for everybody who has a little bit of a surplus or who has the potential to have a surplus. So for salaried people, let's say they have a bonus. So when we do financial plans for people, a lot of times we tell people, okay, you have a bonus and whatever was the shortfall in whichever financial goal, let's plug that up. But then if the markets are high, which we think they are at the moment, and we are not ready to put the money into the stock market, what is the next best use of your money? Why don't you save lakhs of rupees of interest on your home loan? Just park it in this account till the time we make up our minds and actually decide to go to the stock market. Whether it's and we're not really trying to time the market, by the way, but we are just not ready to invest it. Maybe we are thinking, maybe we are planning for the next 2 months on what to do. You can use every single day to help you reduce your interest. So I think it's a great product. And the names of the banks who do this thing, which I'm very, very sure of. I know SBI does it, HSBC does this, Standard Chartered does this, Citibank does this. So most of the foreign banks, as you can see, do it. I think a couple of Indian banks have also recently started doing this. I'm not sure, but probably Axis Bank also does this. Then, maybe you can just investigate or go to some of these loan aggregators and you'll get a great insight into which other banks which are actually doing this.
Right. Next up is Mr. K. Gupta, who's dialed in from Pune. Mr. Gupta, how can we help you?
Yes, ma'am. Ma'am, I own a piece of land near Pune.
Okay.
Okay.
It is under litigation currently. there is a developer. I'm fighting against the developer in a court. Simultaneously, the developer has started building residential units over there, and the bank has given him a pre-approved project status, APF status, by taking an indemnity from the developer. That is, if any of my claim comes into the land, the developer solely will be responsible and the bank won't be responsible. So basically, are the bank authorized to do so? Is it complying with the RBI guidelines? And how can I legally object it?
Okay, Mr. Gupta, tell us this. Do you own the land? Are you the sole owner, or is this a share that you have in the land?
Basically, I've got an undivided share into that land.
Undivided share in the property. What would you say, Kartik?
That's exactly what I was thinking, because if you are the sole owner of a piece of land or a property for that matter, it's really very hard to imagine how somebody could actually come and literally trespass your property in that sense. Because I'm sure any one of us would have taken adequate precaution to, guard our land. I mean, there is a situation where, sometimes if your land is close to the airport and you see slums coming in and all those kind of things happen. But a developer actually coming in, developing is like really a different matter. Now, a developer can't really these days start developing till the time he's got a lot of approvals from the municipal authorities. The banks is actually, pretty much down the line, second, third priority. But the most important thing is the developer, before he even gets the permissions, approvals to start work, to do excavation, to start, digging into the land and starting to erect the building, he has to get a lot of permissions and clearances from a whole variety of departments. Now, all those departments are obviously going to want to know whether or not this land is something which is not disputed, the title is clear, and the developer actually has the rights to go ahead and do some development on a piece of land. That's very important, without which nobody would allow. If there is a dispute litigation, let's take a similar example of that of a redevelopment where 30% people may not agree, but that does not stop the redevelopment from happening. So in a similar sense, the majority of the owners of the land or co-owners with you may be in agreement with this. You may have certain opinions which obviously are sacrosanct to you, which is absolutely fine, and you can have the litigation, but the development is happening, and if there is something that's going to happen, obviously the developer will have to compensate or do a settlement with you of whichever nature that the litigation comes out with. But now, talking about the bank is only going to approve what the developer has got already approved from the various authorities, local bodies and authorities. So based on that, he is approving the project that this developer is doing, and he has also done a thorough technical check on the sanctity of the papers, and obviously the fact that all the properties that are going to be sold on that property are going to be absolutely clear and marketable in terms of their titles.
Right, hope that answers your question there. We are running out of time here, but here's what we've learned today, that you need not buy home loan insurance from your lender. The lender can't force you to buy insurance from them. You can buy insurance from any company. Another option that you can look for is a term insurance cover rather than buying an insurance linked to your home loan. That's it on today's episode of Property Hotline. Kartik Jhaveri, thank you very much for coming in. And if you have any questions related to real estate, you know what to do. Pick up the phone line, get in touch, IDs flashing on your screens. We'll get the country's top experts to answer each and every question. Thank you very much.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/Magicbricks Now. And don't forget to click the like button. You can also follow us on Twitter at Magicbricks Now. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/Magicbricks Now.